Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're jumping down into the world of both Bitcoin and Ethereum to take a look at what's been going on most recently and what I would expect to happen next. Now as I get into this video, if you find it useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap the bell, select all notifications, and in doing so you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. Now if you have not yet joined us in Discord, the link is in the description down below. It's a fantastic community talking crypto 24/7. It's completely free and I don't think you'll be disappointed by what you find down there. So why not go ahead and check that out today. You'll also find links to the new Cheeky podcast, a community-led podcast, basically keeping everyone up to date with the ins and outs of what's going on with crypto during your daily commute to the office. If that sounds interesting, why not check it out? It's available on Apple, Amazon, Spotify, and here on YouTube. Links in the description down below. Okay guys, let's waste no more time though. Let's jump right down into this and take a look at what's been going on with both Bitcoin and Ethereum. Let's start things off just by taking a look at coin market cap here. We have over a $1 trillion market cap. So if we just jump back down into this, you can see that all crypto, including Bitcoin, is just over 1 trillion. And if we just come down here just ever so slightly, you can see that all crypto excluding Bitcoin, so basically just your altcoins, is coming in at $609 billion in terms of market cap. Now, obviously, market cap, it is a simple calculation of the circulating supply multiplied by the current price. So it isn't actually a notion of how much money is actually available in crypto. It's not the liquidity of crypto. It's basically just a macro price. Okay, so if you think about it, it is literally just the circulating supply multiplied by the current price. It's basically just a total price for that particular project. It isn't actually value as such, right? So it's a complicated thing to kind of get your head around, but it's an interesting number. It's a good way for us to kind of measure potentially, you know, how popular a project is. So you can kind of rank them in such a way. Obviously, when it comes to price discovery, price movement, it's only really two things that really factor into that: supply and then demand. Okay, everyone knows that supply and demand is king. So if you can control or squeeze the supply whilst increasing your demand, you're going to see the price of a cryptocurrency move up. Okay, so let's move on then. Let's come into Bitcoin's price. Let's actually make this a little bit bigger here. Okay, and what we're going to do is we're going to talk a little bit about Bitcoin's price action, what's been going on most recently here, and then we're also going to take a look at some Glassnode data, some very important things that I think are well worth understanding and noting. And on that note, what we're going to do is we're going to jump up into the hourly chart here for Binance Bitcoin on Binance to start with, right? So you can see the descent that's been going on here, and we can obviously do some measurements here just for clarity on what structures we've been witnessing and kind of monitoring. We've just drawn a fib here. We can see that we've come down to this 1.382 Fibonacci level. Now, in previous bear market low structures, we've come down to the 1.236. So we've already overextended on what we'd normally be looking at in terms of previous bear markets. And I still don't think necessarily that we're done here either. Okay, so this could be a pattern that looks like this: of 1, 2, 3, 4, 5. Okay, obviously that is not necessarily an impulsive structure, because normally we would expect to see this on a 1.618. At least that's how I've always known Elliott wave theory, although some people say that there's a percentage chance of 5 wave moves to happen at 1.236, 1.382, and 1.618, obviously 2.618 and all that kind of stuff. So essentially, you know, I think for the most part, this is an interesting level, but that's not why we're here on the daily. I'm going to throw you on the volumes here on the daily chart, okay? And what we're going to do is we're going to just shoot on over into this little area just over here, okay? So for Bitcoin, we can see there's a slight increase in the last couple of days. Other than that, we actually saw a decrease. Now, what's really interesting is this volume wasn't here yesterday. Yesterday, this volume was actually very much clearly dropping down, specifically on this micro level over this side. So it'd be interesting to kind of see why Binance has now changed its data flow a little bit for 2 days of actual increase in volume, because that wasn't there as of yesterday. And you can go ahead and check back on the streams that we did yesterday, and you can kind of see exactly what I'm talking about. These pieces of volume, so they were not there yesterday, but now they are there, which is interesting. Kind of gives us a bit of false flags occasionally. So wherever the data is coming from TradingView, which obviously will be Binance has obviously updated something, and now we've got new data in TradingView, which happens from time to time for many different reasons. That being said, though, if we still take a look at this on macro level, we can still see that volumes are decreasing. Whilst the volume is decreasing, what we're seeing the price increase. And this to me looks like very much like a bear flag scenario, as in we have the pole, we have the flag, and we have a decrease in volume. Okay, never a good combination, as when we had the pole coming down, we have, let me grab the poll basically here. And what do we see? We see the volume increasing, creating the poll, and then we see the volume decreasing as we create the flag. Now, obviously, the big caveat here is that we saw a decrease just inside here initially and a small increase here. But again, this increase isn't actually of too much of importance. But that being said, it's an important thing to kind of reference, because what I'm going to do now, knowing that we have a drop in volume whilst the price is pushing up, and we have a very clear kind of bear flag kind of scenario going on in the same way that we did over this side as well. It's not unusual. We had the same scenario over here, and that's kind of what we're seeing here. Same with this one here as well. Now, what I'm going to do is I'm going to bring up our Glassnode data. Now, before I actually talk about that, I'm going to bring Glassnode's website up. For those who are unfamiliar, Glassnode is basically aggregating data from multiple different exchanges, and you can analyze kind of different things, different metrics for several different projects. You can come in here and you can find things like Ethereum or Litecoin, etc. So we're talking specifically about Bitcoin here, and what I've done is I've taken all of the data. I say all, I've taken the parts of the data that's most interesting to me, and I've thrown it into Power BI through APIs, and I created my own reporting system. Okay, so I say a system, I created my own reports using Power BI. Let's go ahead and just bring this up, right? So to start with, what have we got? Well, we've got inflows that are 6.71 million in 2022, and outflows are 6.95 million. Okay, now this is important because essentially we've seen a lot more Bitcoin leaving the exchanges than has been going on to the exchanges, and we've seen a lot of accumulation being going on. Okay, now this gap is narrowed quite recently during this recent pump to the upside, as in more Bitcoin's been going onto the exchanges than has been coming off, whilst the price has been moving up. And I'm going to go through that in a moment as well. So that is not what you would expect to see, and we'll go through some more detail on that. Over here, we can see that as the price has been pushing up recently, the balance of Bitcoin on the exchanges has been increasing. Again, so following those inflows, we can kind of see more Bitcoins become available, even though the price is pushing up, which is the opposite of what you would expect to see, just if you further think about it logically. Here we have a net change of 30-day average. Okay, so basically take all the inflows, all the outflows. Each one of these bars is a 30-day average of that change. And basically, for the most part, we'd seen a lot of Bitcoin leaving. So when we're below the zero line here, this is more Bitcoin leaving on a 30-day average. And you can see how this has been diminishing recently. Okay, we've been losing momentum behind the accumulation of Bitcoin. And again, I'm going to show you what that looks like. I think it's going to turn positive, as in we're going to have more Bitcoin on the exchanges in a net 30-day period soon. Down here is the hodl waves. This basically is how long Bitcoin has been static in someone's wallet and whether or not they've got diamond hands, essentially. For the most part, long-term holders are holding incredibly strong and are not being shaken out of the market. And usually it's aging quite well, as in they are definitely long-term holders. Usually though, when you start going down lower than a year, you start to see a little bit more fluctuations, and you can see that the activity had increased in the last 24 hours from 1.1% to 1.6%. Okay, so we know that the short-term activity has increased in the last 24 hours, and obviously the long-term holders haven't really been phased by anything that's going on. So all of that is looking pretty interesting and pretty good. Okay, so let's move on to the next page, which is kind of the inflows and the outflows. So unlike Glassnode data, here, if I just come into I don't know if this is going to load without me logging in. It's probably going to ask me, so log in. Let's just log in there. So we have the inflows here, right? And if I just shoot this back, we have the inflows on one chart and we have the outflows on another chart. I find this just too difficult. Why can't we just have it on one chart, right? So what I've done is I've gone ahead and just done that, right? Created one chart overlapping the inflows and the outflows, and we can easily see where we have divergences, right? Where more Bitcoin goes onto the exchanges or comes off it to the exchanges, right? So on the 15th of July, we saw 44,000 Bitcoin go onto exchanges and 29,000 come off. Okay, this is a common story. We saw over here on the 17th, 30,000 go on, 14,000 come off. We saw, what was that, yesterday? 45,000 go in, 42 come out. Now, actually, that wasn't yesterday, that was 2 days ago. So yesterday on the 19th, we saw 39,000 go in and 42 come out. So for the first time in a little while, first time since the 13th. So we're pretty much 6 days we've been just seeing more Bitcoin go on than go out, right? And we can obviously marry up those 6 days with the price action of Bitcoin. But yesterday was the first day we actually saw more outflows, marginally by an extra 3,000 Bitcoin come off of the exchanges then versus what went on. Okay, so for the first time in about a week, we've seen basically the exchanges losing BTC. Okay, so just note that in mind, or keep that in mind. Now, the next thing I really want to talk about is obviously those wallets. Okay, we have over 10 Bitcoin or more wallets, over 100 or more Bitcoin wallets, and over 1,000 Bitcoin or more wallets. Okay, basically whales, sharks, dolphins. Very, very simple, straightforward stuff. Now, the thing that we should note about this is, if I bring up our chart here on our daily chart, what's the most obvious thing that we see here? We always see the price moving up as we see that volume dropping down, okay? And this is interesting because what we actually have here are the whales, and that are lowering or basically decreasing, right? So the number of whales that actually exist here for Bitcoin decreases, and that is decreasing as the price is pushing up and the volume is dropping down. So what's really interesting about this is these guys are selling, okay? These whales, they're selling, and they're selling into the retail FOMO that is coming on over here, okay? So as that price pushes up, these guys are basically selling their bags. Now, I usually follow the money, okay? I don't follow the FOMO, I don't do all that kind of nonsense. And when the data doesn't make sense, that obviously should be a concern, right? So when we start seeing, these real whales in the space, playing their games and they're decreasing their positions whilst retail is increasing their positions. I mean, just take a look at the 10 Bitcoin or more, right? These guys are increasing, and that's coming from these guys. I wonder which ones are going to be better off longer term. We have the 100. These guys are some usually following the whales, but to be fair, they've actually started to accumulate. So maybe the FOMO is a bit real with these guys. But these guys over here, these whales, these 1,000 more Bitcoin wallets, they are not, going straight into this. Now, to kind of caveat some of the comments that I've seen before, this is greater than 10 Bitcoin, which means the whale wallets are also counted inside here, and the shark wallets are also counted in here. And inside the shark 100 or more Bitcoin, we also have all of the wallet counts for 1,000 or more, right? So basically, this isn't between 100 and 1,000. This is basically just over 1,000. So anything that is over 1,000 is counted here, which is why we have over 15,000 wallets, whereas we only have 2,100 or so wallets over in the whale section. Okay, so this is not split out. We haven't split the whales out of these buckets. It's inclusive. So although they are decreasing out of 1,000, they might have over 100 and therefore still be inside our shark wallets. Okay, so just bear that in mind. This is not going down and these are going up because these guys are now in here. They've always been in here, essentially, okay? And so just keep that in the back of our heads. Now, essentially, when I see the whales basically are selling to the retail, I am obviously getting rather concerned that this particular pump to the upside does not feel natural. It doesn't feel like this is going to be a long-term solution. It definitely is not a reversal. Now, obviously, we could obviously say that, the bottom might be in. And I'm not really going to say that it is or it isn't. I think personally that we probably will be retesting those lows at some point, and it's possible that we do drop down lower. Okay, and that's kind of where I sit with Bitcoin. But at the same time, it is possible that this just is the bottom, but we do have to move down regardless, and I'm going to show you why. So let's jump on down into our hourly chart and just expand this up. So yesterday, on our live streams, we did 2 live streams yesterday. First of all, we were talking about this test up here basically being a double top, okay, with our wave 4 high. So basically this was 22,995. We had the double top here after having a double top down at this end. And basically once we had actually retested down our lows and we surged back up, we spoke about this yesterday afternoon, I was saying that our probable targets are going to be, or the next target to really focus on was going to be 23,810, of which we found 23,800, but according to Binance, got rejected from there and fell back down to the previous double top area, turning that into a support line at 22,995. Okay, so essentially we followed that path. The next target would be pushing to 25k, and that would actually then complete our macro 1-to-1 ratio. Now, there's no guarantee that we move up there, okay? But essentially, all of this movement that we have seen on our Bitcoin chart so far is corrective. And what do I mean by corrective? Let me find an empty space. So corrective are usually 3-wave structures, okay? Whereas impulsive or trend-based structures tend to be 5 waves, okay? Now, you can find that 5-wave structures appear inside a 3-wave structure, which basically just still makes them corrective, okay? So when we see corrective, what we actually are saying here is it's short-term movement. With corrective moves, you tend to find lots of overlap, okay? And you can see that here. And sometimes you can mistake these kind of short-term corrective moves as diagonals, and sometimes you see a corrective move and it turns out to be a diagonal. And a diagonal is basically either a beginning or an end of an impulsive structure, so a trend. So this is why it's really difficult to say that, you know, 17,622 is the bottom or not the bottom, because A, we've got this overlapping structure that looks corrective but could also be a trend. So if it's corrective, then chances are we drop down lower. And if it's a trend, chances are we don't. So it can literally go in either direction. So very important that we don't necessarily reflect too heavily on this particular low level, but more importantly, on the internal structures of what is going on within this corrective movement, as I see it. Okay, and obviously we want to run the probability of what it means when we start to reach these overbought areas on such heavy charts. Now, the other thing we have to obviously caveat all of this with, and it's a very important one, is what's going on with these whales, right? As this price has been pushing on up and those whales are decreasing their position, you tell me and ask yourself the same thing honestly, whether that makes sense. If we're going to the moon and we've hit the bottom, why are the whales de-risking? Just answer the question, right? And then really think about it. For me, it would only tell me personally that the whales are anticipating some kind of movement to the downside. Okay, pockets of liquidity are going to be down here somewhere, as a lot of people are starting to long the market, thinking that we're going to the moon. And as a result of such a thing, pockets of liquidity or liquidation points start to open up down lower. Whether they are lower than 17,622, I don't know, but lower than the current position, yes, they are. Okay, and what that's going to mean is the price will gravitate towards them. The whales will gravitate the price towards this area, and as a result of that, people will get liquidated, the price will crash down, and wherever it ends up being, whether it stays higher than 17,622, great. That's going to be marking a good accumulation point if the data tells us that, or dropping down lower, maybe 15, 14,000, who knows, right? But essentially what I'm saying here is it doesn't make sense for the whales to be de-risking if we're going up to the moon. And at the same time, it's very unusual that we see volume decreasing whilst the price is pushing on up. It basically shows a lack of demand, and therefore this feels very artificial in the way that it is moving. And of course, being so heavily overbought, it just kind of begs the question, when is the next drop to the downside? In my opinion, it should be imminent. And therefore, we want to be kind of really cautious and concerned. Okay, so for Bitcoin here, my next kind of movement on our macro 1-to-1 ratio puts us at about $25,000. And, you know, that's kind of where I kind of see this thing potentially then topping out. Essentially, though, our wave movement to the next level. So if we start thinking about where the next kind of resistance lines are going to be, past this, it's 26,700. So that's also an area to kind of consider. Invalidation of further downside comes in at 29,282. But that would be a very extreme level. And, you know, I think essentially really we'll be talking about moving up significantly higher than 30k to really truly be saying that we're done with the lows. But, you know, ultimately, just because the lowest point of 17,622 is in, doesn't mean that we can't move down to $18,000 and, you know, correct massively. And I think that's one of the biggest caveats to this that probably it is worth noting, right? And essentially that is that although we might not go down into lower lows, there is still very significant downside to be had. You know, we could hit 17,700, for example, right? It's still not a lower low. We've had the bear market low, but you still have to correct on down. So although a lot of people are really kind of FOMOing in, and that seems a bit crazy to me, if we take a look at where our positions are in terms of just momentum behind this, we can see that our hourly has got plenty of room to grow, so we're probably going to be pushing past 23. On the 4 hour, we're heading back to the overbought area. The 8 hours already overbought again, and the daily is overbought. The weekly has progressed up a fair amount. It's no longer overbought, and so therefore that'll be an interesting kind of tell to see whether or not we're going to pull back down. Last time we saw this kind of level of movement, essentially it was just up here. Actually, let me just try to find a better kind of movement on this one. So yeah, I mean, for the level of movement we've had, it's probably more like this time in October 2019, where we pushed up and then still fell back down. And you know, essentially our stochastic RSI is not an indication of price movement. It's just an indication of how much strength is behind a price movement. And considering we've moved the price rather small amounts on Bitcoin's chart, we've moved the stochastic a fair amount. So this tells me that this is not going to end particularly well. And you know, well, we'll keep an eye on it, but I'm not optimistic, thinking that, you know, we're not going to, you know, just continue to go straight up, if that makes sense. On our daily chart being so overbought as well, you know, we should be concerned with that. So for the most part, I would expect at least 25 within the next kind of day or so. That kind of feels pretty comfortable. But from there, really no real need to continue this motion to the upside. We basically would have completed our macro ABC, and this is a really complex correction. Then we pull back down, and then we kind of measure from there where we think things are likely to go. The next correction down could be a really good accumulation point with confirmation that we have had a bottom. And if not, and we do pull back and we actually then start to count the waves indicating more room to the downside, new lower lows, then that would mark a good accumulation point. So either way, I do think that FOMOing in right now is not the best strategy, but do bear in mind that I'm not a financial advisor and I cannot give you financial advice. All I can do is give you my thoughts and opinions on the data as I see it in the charts. And personally, I think that we've got a couple of options here. We wait for a correction and we just take a few percentage points hit, right? Because ultimately, long term, it doesn't matter too much. We take a few percentage hits by not FOMOing in and just accumulating slightly lower, okay? And the other part of this is that we're right and we go down into new lower lows, and actually we saved ourselves a whole lot of pain. So essentially it makes a lot of sense from a logical point of view just to kind of not FOMO in, not to act emotionally, just to sit and wait for the correction. When things become all oversold, specifically on the daily and weekly charts, essentially that's going to be our point where we think, okay, cool, this is probably where we want to be accumulating and you know, taking advantage of it, right? But obviously use that with our subwave counting to make sure that we are not, you know, going to be buying too early and all that kind of stuff. But where we are right now seems incredibly overvalued considering the momentum of the price action and considering how close we are to completing a macro corrective structure. So FOMOing in right now doesn't make a lot of sense in my opinion. But let's go ahead and jump into Ethereum, right? Because we want to check out what's been going on with ETH as well. So let's go ahead and bring this one up, okay? So essentially we are in a fourth wave move, and let me just delete this one off here for a second, right? A fourth wave move on a macro. So let me bring this to a daily, bring this back down, okay? So with our daily chart here, what do we see? Well, we see that we have a 5-wave structure. We've gone past, unlike Bitcoin, 1.618. So Bitcoin has basically bounced from 1.382, but Ethereum dropped down lower than 1.618, okay? Now, this basically does make our daily chart a very impulsive structure to the downside, where there's a high probability of a fifth wave down lower, i.e. new lower lows. Now, obviously, that's going to offend people because that's kind of how people tend to be with this when you have a difference of opinion, I guess. But essentially, the data is the data. Elliott wave theory is a series of rules. When specific things happen, then you expect another thing to happen, right? So in the case of this, where we have basically a 3-wave structure, and that third wave hits 1.618, it's no longer a 3-wave structure, it's a 5-wave structure, meaning that you have a 4th wave up and a 5th wave down. Now, there are, of course, rules that apply here that would prove that invalidation could occur. And what we mean by invalidation is you can prevent the 5th wave down lower by pushing the 4th wave higher than wave 1 low, okay? Because wave 4 is not allowed to cross wave 1. So when this happens, and in the case of Ethereum, this is 2,159, it would prevent moment a fifth wave going down lower, at least within this structure, and it's still a three-wave overextended third wave structure to the downside. Okay, so this is rare. It can happen though, but essentially when you hit 1.618, I think it's something like 90% of the time that you end up dropping down into a fourth and fifth wave, right? So we should be thinking that our corrective move for Ethereum that's been so parabolic going up because people have been FOMOing in, essentially is coming to an end. Okay, and for Ethereum, we can of course dive a little bit deeper. So let's do that. Let's come into Glassnode, and as I said, this is for multiple coins, so let's go ahead and check out Ethereum. Okay, so here with Ethereum, we're going to go and check the inflows. Okay, so to start with, our inflows for Ethereum, this is the one. So my inflows for Ethereum coming in here at 478,000 ETH. Okay, so 470,000 ETH on the inflows yesterday. Okay, come to the outflows and we have 833,000. So we're basically saying that double it's a little bit less than double, but pretty close. We've got huge amounts of outflows. Okay, so more outflows than inflows that are currently going on with Ethereum. However, on a macro level, when we reflect on the entirety of 2022, we've seen a lot more Ethereum going onto the exchanges than coming off. And actually what I might do is I might drop all the Ether data into Power BI and actually draw this up as well. Let me know in the comments if that's something that you want to see. I haven't done that yet, but if that is something that you want to do and you want to see kind of Power BI reports that I've drawn up with Bitcoin, but for Ethereum, let me know. I can do that as well. So let's bring this back up here, right? So what we're witnessing here is basically a lot more outflows recently than inflows, and that's good in terms of seeing, you know, what's going on there. We're seeing accumulation for Ethereum. Now, if we go ahead and actually just bring this back up into our addresses, and we actually go ahead and check out, you know, what's got more than 10. Actually, we'll go for 10,000 ETH. Okay, so 10,000 ETH has a slight increase yesterday, but from a macro standpoint, specifically since April, they've been kind of decreasing on this macro. Okay, so keep that in our heads. 1,000 or more have been increasing, but do expect a little bit of volatility here. Recently, during this recent pump, pretty much since the 12th, they've been dumping. Okay, so 1,000 Ether or more, they've been decreasing, de-risking as the price of ETH has been going up. So again, what you're witnessing here is these whales selling into retail as the price pushes up. Check out the 100s, they've been accumulating. So again, this is the retail money, the higher earners, I guess. 100 ETH or more. And basically, they've been accumulating during this push to the upside, FOMOing in hard. 10 ETH or more, again, same story. 1 ETH or more, same story. But one of the big takeaways here is that basically the whales in the space are selling into this pump. And that's pretty clear from both aspects of 10,000 or more or 1,000 or more. These guys have basically just been selling into this particular movement to the upside. So again, we should be cautious. We should be concerned about what that means. Now, when we throw the volume in here, we just expand this up, right? You just bring this up here, and what do we see? Well, we can see a couple of things. Let's start with our macro. So from our low points to our high points, the volume has been decreasing. It had a much bigger volume on the way down than it does on the way up. However, this recent movement, this from the 13th, is a slight increase, I guess. Actually, it's pretty standard, actually, thinking about it. So yeah, it's kind of, it's a little bit there. I mean, I guess we could argue there's a small kind of push to the upside here, but essentially the volumes are not as significant as you might want them to be. Essentially, we kind of hit a cap right here. Let me grab this horizontal ray right there. You can kind of see we hit this cap. Now, so we kind of see decrease in volume in the middle of this, slight push up on the 18th of July, and then basically sending pressure again. So interesting on the volume side of things, not exactly conclusive 100%, not as clear as what we had seen previously, but nonetheless, it's not what you'd necessarily want to see. And obviously with those whales obviously selling into this, basically there's a transfer of wealth between the retailers who are basically buying up the whales' Ethereum before we have this move to the downside. So knowing that we have to move up higher than 2,159, there are a lot of outflows, so we could hope that maybe there's enough shrinkage in the supply to kind of sustain this to move on up there to prevent retail getting completely wrecked. But if we don't hit that 2,159, our expectation should be that we have a move to the downside. Okay, so let's go ahead and pull this into our daily. Our hourly chart, and talk about this structure then. So essentially what we have here is this movement, this ABC structure up, and for the most part what we've been trying to track is to see whether or not this C wave is going to turn into some kind of mega impulsive structure upwards. Okay, now we've hit the 1.618 and this is all the way through, and what we're waiting for is a wave 4 movement to the downside, and what we're waiting for here is to either see one of two things. One, we're going to come down lower than 1,276 and invalidate this as a 5-wave move, or two, we just pull back just enough to find support around this 1.236 as being $1,365, and basically that would allow us to then mark this up such as this: wave 1, wave 2, wave 3, some kind of wave 4, and then a final wave 5. Okay, and then what that would mean is this is a 3-3-5 structure. Okay, and it's a corrective move. It's a 3-wave move, so it is all short term, and you would notice that it would keep us well below $2,159. Okay, so the level of optimism that I have for us to kind of stay or to go above 2,159 is incredibly low. I just don't think it's probable. Now, on our hourly chart, we do have a stochastic that can move up, specifically on our 4-hourly chart, so we could see some growth there. The 8 hours come down a tad, and the daily is incredibly overbought. The weeklies come out of the oversold area very rapidly with, if we zoom out, minor kind of movements here. So this is not giving me a lot of confidence. This is just looking like a wave 4 movement, and we saw this before as well with our wave 2 up here. We go from oversold to overbought very, very rapidly, and then we crash quite hard afterwards. So we're concerned. I am. I don't think this is long term. I do see there's some kind of correction coming in, and it could be that the bottom is in, and we see a correction here come down, and then another surge up that hits this area. But it's far too soon to be calling that. Essentially, our structures are telling us at the moment that we have to move down, and the higher that this pushes, the lower that we end up dropping. So, for example, with Ethereum, if I take this current low point and I take the current high point just up here, as this constantly changes, this is now indicating that we are going to be, if I missed that, let me just check. No, that's good. Okay, so those prices have changed ever so slightly. I hate Binance when it does that. Essentially, we are talking about $600 to $760. This actually moved up by $2 on either end of this spectrum, right? We have I had this at 599 yesterday, and 760. It's now 602 and 762. So it's fluctuating ever so slightly. For whatever reason, the data with Binance has changed a little bit. But for the most part, the higher that the 4th wave goes, the lower that we end up dropping here with our 5th wave. So if we do not cross 2,159, there's going to be some pretty big damages being done to ETH if we continue to move the way that we are. But essentially, for Ethereum, I'm expecting a slight push higher, but I want to see this 4th wave first. I want to see us kind of move back down and kind of just correct in. Now, it's possible that we don't have that, and all of this here, this C wave in itself is a 335. And the other thing I was speaking about yesterday is this pattern that bothers me. We move up, we kind of pull to the side, we move up, we kind of pull to the side, we move up, we kind of pull to the side, we move up, we pull to the side, we'll probably move up, we'll pull to the side. This pattern is a pattern that you see quite a bit with market makers. What we mean by this is essentially they come up here and they liquidate positions, they move up, they liquidate positions, they move up, they liquidate positions, they move up, they liquidate positions, and then everyone's like so bullish by the time it gets to the top, we're going to the moon, they open up long positions rather than short positions, and then they just reverse the process on the way down. We saw this a little while back with Bitcoin when it was hitting its lows of 32 and moved up to 48. Very similar pattern within its first wave structure was this one. So caution should definitely be applied there. As I said before, all of this kind of movement up here is all very, very corrective. negative. There's nothing giving me confidence to think that this is a change in trend, and the trend is to the downside. And invalidation of our downside comes in at 2,159 here for Ethereum. So guys, I'm going to leave the video there. If you have found this useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap the bell, select all notifications, and in doing so, you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. With all that said, done and out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.